The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Happy Thursday. Welcome to another edition of Breakout Investing on TFNN, 877-927-6648. That's the phone number to use. My show airs daily on TFNN from 3 to 4 Eastern. If you can't listen live, you can pick the show up as a podcast on iTunes, and don't forget, you can listen to all TFNN programming on your smartphone these days. All you have to do is open your smartphone browser, type in tfnn.mobi. Very easy, very simple. You can listen to the stream 24/7, and the daily reminder, don't forget about Tiger TV on the homepage of TFNN.com, Channel 1. The show is carried live. It is archived on Channel 13, Tiger TV. Not only do you get the show audio, but you can listen to the video as well. And Tiger TV is also viewable on your mobile device. Just open your browser, type in TFNN.com. Over on the top right-hand side of the website, you'll see a box with some cell phones in there. Just click that box. It'll recognize what kind of device you have and start streaming Tiger TV right on your phone. Pretty cool. All right, here we are 3 days into a rally attempt for the major averages here. NASDAQ Composite giving back some of its earlier gains, but still up just over 9 points, 0.3% gain to 3171. We've got the S&P 500 large cap index right in the middle of its range here, up 4.3 points, about 0.3% gain to 1520. And finally, we'll check on the blue chip index, Dow Jones Industrial Average, also trading in the middle of its range. It is up 24 points, about 0.2% to 14,099. All right, so we are 3 days into a rally attempt here. It is, believe it or not, a market that is still under distribution, but I want you to take a look at the weekly charts for these indices. This is what is so counterintuitive about this market, because, yes, we saw fairly unequivocal distribution in the major averages last week, specifically Wednesday and Thursday. Bearish day for the market to kick off the week this week on Monday. Then Tuesday, Wednesday, Thursday, higher each day. This is a look at a weekly chart for the Dow, and this is a weekly chart that is pretty bullish here. Okay, so you've got distribution in the market, but you've got a weekly chart for the Dow, and really for all three major averages, weekly charts that look a lot more bullish than bearish at this point. Here's a look at a weekly chart for the S&P 500. You can see a recent breakout, support at the 10-week moving average, and then for the NASDAQ Composite as well. Look at this weekly perspective here, and again, what you have with the NASDAQ is just really a cup with handle base forming with a potential breakout taking shape. So this is obviously a tough market to be short. On the one hand, it makes sense to be short when you're in a market that's under distribution, but it is also tough to be short in a market that has proven itself to be deviant in the past. And, there are plenty of stocks out there that continue to act well. So we are sticking with 3 long positions right now in the Ultimate Growth Stocks model portfolio. If you want to see what those holdings are, check out a 30-day free trial. You can do that right on the homepage of TFNN.com. Just click on the newsletters tab on the homepage and then click investment newsletters. So we don't have a lot of exposure to the market right now, but we are long 3 positions currently, and willing to give them more time to work. Not that long ago, we had 8 or 9 long positions. So we've been taking some money off the table, taking profits, and but we're willing to let the 3 longs that we currently have going, we're willing to give them a little more room to work. Checking in on volume today. Always like to pay attention to volume. see what's going on here. At last check, volume on the NASDAQ was tracking slightly higher than what we saw yesterday. Average volume yesterday on the NASDAQ at 1.69 billion shares. We're tracking, about 4% higher than that today. A little bit lighter on the NASDAQ, down about 5% from Wednesday's level, which was also average at 670 million shares. Biotech stocks working in spades today. Let's start by taking a look at the IBB. This is an iShares ETF, basically the biotech ETF. Some of its top holdings are Gilead, Celgene, Biogen, IDEC, but working on 3 straight gains here and trying to break out here. So compelling price action for the IBB, up 1.1% today to 148.26. The swing point here, 148.42. So flirting with a breakout is the IBB, and other biotech stocks working well today. Biogen, IDEC, BIIB, showing relative price strength, up for 3 straight days here. Don't forget, FDA approval is expected sometime over the next few weeks for its oral MS treatment, BG12. This could be a blockbuster drug for Biogen if approved. That should be coming up over the next few weeks. So Biogen acting well, up 0.9% today to 167.50. Little breakout for Celgene today as well. Celgene, CELG on the NASDAQ. Decent volume, up 3% today to 104.03. The swing point here, 102.29. So buying here, I don't think you're chasing, but again, buying stocks like this in a market that's under distribution, taking on a little more risk. Then again, if we do get some follow through for the major averages, maybe tomorrow, Monday, Tuesday, big percentage gain and higher volume, then we're dealing with a new market uptrend, and these are the types of stocks that you want to keep an eye on. So Celgene breaking out today. You can see a pretty nasty reversal in Celgene last week. This was when the market was starting to show signs of weakness. Again, significant distribution in the major averages last week on Wednesday and Thursday. Probably was the day here where Celgene reversed in heavy volume after trying to break out over 102. But buyers back in the stock again today. High quality name in the biotech space. Regeneron, REGN. We've talked about Regeneron a lot in the past. This was actually a stock we were long at one point several months ago, and was a nice booked a nice gain with Regeneron Pharmaceuticals. Its flagship drug is Eylea, which is used to treat age-related wet macular degeneration, leading cause of blindness in elderly people. Regeneron still underneath its 50-day moving average here. It has been in rally mode for the past 6 sessions or so. Technically not all that strong yet because it's still sitting underneath its 50-day line, but outperforming again today, up 1.3% to 167.01. And finally, Amgen, AMGN, large cap, high quality name in the biotech space. You can see a gap up earlier this week on Monday. Remember, Monday was not a good day for the market, but Amgen did gap up and closed near its low for the day, but has extended gains since then, up 1.2% today to 92.16. And when we look at a weekly chart for Amgen here, you'll see a nice little classic base breakout here. So Amgen looking pretty solid here. Here was your base that formed towards the end of last year, and a nice breakout here. So when you hear the term technical breakout, look at a weekly chart for Amgen, and that is what you are seeing this week in that stock. So biotech's outperforming nicely today. Let's check in on OCN. This was earnings report that we were watching. These mortgage servicers expected to see very strong business over the next couple of years. Ocwen Financial up 3.7% today to 39.20. Investors like their earnings report. Big earnings growth, up 488% from a year ago to 47 cents a share. That was actually 3 cents below the consensus estimate. Revenues slightly better than expected at $236.4 million, up 51% from a year ago. Two other earnings reports in the mortgage servicer space coming up next week. One's going to be Nation Star Mortgage Holdings, ticker NSM. They report on March 7th. Still technically a sound stock after recently coming down to its 50-day moving average, working on 3 straight days of gains here, up 0.9% today to 38.66. And Walter Investment Management, that is WAC, another mortgage servicer, going to be coming out with earnings right around the same time as Nation Star. Don't have an earnings date for Walter WAC, but it should be next week around March 6th, March 7th, something like that. You can see WAC trying to hold on to its 50-day moving average here. Stock is down 0.9% today to 46.03. Still hanging in there, though. Another earnings report today. I'll tell you what, Domino's Pizza, one of the unsung heroes in the market. I mean, just in terms of a stock that really has done nothing but go up, and it continues to be a very, very strong performer in the market, up 2% today to 47.77. Another great earnings report. Profit up 23% from a year ago to 64 cents. That beat the consensus estimate by 4 cents. Sales up 8% to 539.7 million. That was about a little more than 7 million above the consensus estimate. Same-store sales up 4.7%. The company introduced Pan Pizza in September, basically to challenge Pizza Hut. CEO Patrick Doyle said Pan Pizza sales exceeded the company's expectations in the quarter. So another strong day of performance for Domino's Pizza. And then another newsworthy stock today. Late Wednesday, Pandora Media announced plans to limit the availability of free music on mobile devices at 40 hours a month. I listen to my radio a lot on my iPhone, so we'll see if we'll see what this does to business. But they're going to cap the availability of free music on mobile devices at 40 hours a month. That's in the face of rising royalty rates. Pandora is going to be coming out with earnings next week as well on March 7th. They're expected to lose 5 cents a share, but sales up 51% to 122.4 million. Shares of Pandora down close to 5% today to $12.12 on the news. U.S. dollar index, let's see, market pretty much unfazed by a strong dollar today. Dollar index higher again to 81.89, up about 0.4% on the day. April gold settles at $1,578.10 an ounce, down $17.60 or 1.1%. Gold for the month of February down 5%, and finally April crude oil fell 71 cents to $92.05 a barrel for the month. Prices fell 5.6%. Break number 1 coming right up. We'll be back in about 3 to 4 minutes. Thanks very much for tuning in, folks. Ken Shreve with you. Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Major averages bleeding a little bit into the close here, but not by much. The Dow up 26 points to 14,101. NASDAQ Composite up by a little more than 7 points to 3170, and the S&P 500 up just over 4 points to 1520. Mentioned volume in the market today. Light volume again. NASDAQ volume right now tracking about 3% higher than what we saw Wednesday, which was 1.69 billion shares. NASDAQ volume lighter by 5%. It tracking 5% lower than what we saw yesterday, which was 670 million shares on the New York Stock Exchange. All right, I wanted to check in on a couple of oil refiners here. That has certainly been a pocket of leadership in the market. Western Refining came out with earnings, working on 3 straight days of gains here, well off its high of 37.57, but still up 2.7% on the day to 36.05. And just continuing to show relative price strength here. Western Refining made $1.45 a share. That was 8 cents better than views, up 190% from a year ago. Sales down 1% to $2.25 billion, slightly below expectations, but investors still bidding shares higher today. Also wanted to take a look at HFC. daily chart first for Holly Frontier. This is a stock that continues to look very strong here, up 1.3% on the day to 56.43. Another oil refiner. Leadership in the refiner group is really a dime a dozen. There's a lot of stocks that are acting very well in this group. Holly Frontier, you look at the weekly chart here, you can see a breakout 4 weeks ago from a nice little base here, and still holding above its 10-week moving average. So one of many bullish charts out there in the market. Holly Frontier still looking pretty good. Yields, we didn't take a look at yields today. At last check, slightly lower. 10-year note at 1.88%, 30-year bond 3.09%. Economic data. Earlier today we had weekly jobless claims, bigger than expected drop, down 22,000 to 344,000. Economists were looking for a drop of only 2,000 to 360,000, so better than expected news there. And then the closely watched second estimate to fourth quarter gross domestic product. The initial estimate showed contraction of minus 0.1%. This time around, second estimate showed growth of 0.1%. That was below expectations of growth of 0.5%. In the third quarter, the economy grew at a rate of 3.1%. So interesting, earlier this week, the National Association for Business Economics released a survey of 49 economists that the consensus view is that the economy will grow 2.4% this year in 2013 and 3% in 2014. So not too bad. We also had the Chicago Purchasing Managers Index came out today. Better than expected reading, 56.8 in February versus 55.6 in January. 56.8 was better than the consensus estimate of a reading of 54. So good data there. Coming up tomorrow, personal income and spending for January, the final reading on consumer confidence for the month of February from the University of Michigan, and also the ISM Manufacturing Index will be out tomorrow. That is probably the most significant piece of manufacturing data that the market, it's widely followed, that ISM Manufacturing Index. Take a look at a couple of other earnings stories here. The news wasn't good at J.C. Penney. Remember, Ron Johnson came over from Apple about a year ago, been trying to turn this company around. Bill Ackman from Pershing Square Capital Management. It's a big short position in Herbalife. He is long this stock, and not sure if this trade is working out for him. J.C. Penney down 16.5% today to 1766, well off its intraday low of 1657. So J.C. Penney last trading at 1766, down 16.5% on the day. The story, loss of $1.95 a share. That was much bigger than the consensus estimate for a loss of 18 cents. Sales down 28% to $3.88 billion. That was also below expectations. So numbers were not good at J.C. Penney. Also in the retail space, we have squeezed Limited Brands in here, LTD, before we head into the next break here. Shares of Limited Brands up 2.6% today to 45.66 on better than expected earnings and sales growth. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Three days into a rally attempt for the Dow, NASDAQ Composite, and S&P 500. And the Dow right now up 33 points to 14,108. NASDAQ Composite up 9 points to 3171. S&P 500 up 4.5 points to 1520. It is, I mentioned at the top of the show that it is a market that is still under distribution, which makes it a difficult market, but it's also a market that could be on the verge of breaking out to the upside again. So in this type of environment, very difficult to have an edge. On the one hand, when a market is under distribution, you don't want to be aggressively going long stocks, but then again, you've got a market that could be on the verge of breaking out. And tomorrow would be the fourth day of a rally attempt. And during the many years I spent at Investors Business Daily, I learned the importance of recognizing follow-through days or signs of strength by the major averages, where you get a big percentage gain in higher volume on day 4 or later. Could be day 5, 6, 7, 8, 9 of a rally attempt. So the earliest we could see follow through would be tomorrow, and it's not out of the question. But what is also not out of the question is that the distribution that we saw in the market last week and Monday earlier this week is going to continue to make its presence felt, and that's most likely going to get in the way of an upside, meaningful upside breakout for the market. So a lot of mixed messages from the market, very difficult market to navigate here, and in an environment like this, it's generally best to do not much of anything. Just kind of sit on the sidelines and wait for the uncertainties to subside. And at this point, if we do get meaningful follow-through, we do get a follow-through day, then we'll start dipping our toe in the water again and nibbling at some longs. But that is far from a sure thing from happening again because of the recent distribution that we've seen in the major averages. So that is that. So Limited Brands, gap up today. We talked about that just before we went into a break. Limited Brands, a parent company of Victoria's Secret, Bath and Body Works, very well-run retailer here. Their earnings were up 17% from a year ago to $1.76. Sales up 10% to $3.85 billion. As I mentioned, both better than expectations, and the stock is benefiting as a result. Talk about a counterintuitive market. You had an earnings miss at Monster Beverage, and you had a sales miss at Monster Beverage. And what does the stock do? Well, it gaps up and is currently up 3.3% to 51.25, well off its intraday high of 53.88. This is a stock that a lot of big sellers have been in Monster. There's always some rumblings that Coke may be interested in buying Monster Beverage at some point, so it's definitely been mentioned in the past as a takeover candidate, so it's probably always going to get a little bit of a premium for that reason. But the numbers not so great at Monster Beverage, but the stock's still up 3.3% to 51.25. And then low-priced Groupon, daily deals company, very rough day for Groupon. Stock is down 25% to $4.51. They were expected to turn a profit of 3 cents a share, but they lost 12 cents a share. That's not good. Sales up 30% to $638.3 million. That was right in line with expectations. Big sellers in Groupon today. Stock down 25% on weaker than expected earnings. Also, Valiant Pharmaceuticals. This is a company focuses in the areas of dermatology, neurology, and branded generics. Another strong-looking chart in the market here. Valiant up 1.1% today to $67.50. It earned $1.22 a share, a penny better than estimates. That's up 30% from a year ago. Sales up 43%. Good top-line growth to $986.3 million. That was nicely above the consensus estimate of $949. And then an interesting earnings conference call today from Catamaran Corporation. This company used to be known as SXC Health Solution. They're a provider of pharmacy benefits management services. Wild day of trading for the stock. Hits a low of 51.36. Now trading at 53.92. Still down 2.9% on the day, but just like earlier this month in February, it came down, touched its 50-day moving average, did the same today, trading near its high, but still down 2.9% to 53.92. The earnings were good, up 63% from a year ago to 39 cents a share. That was better than expected. Sales up 142% to $3.3 billion. That was in line. Their guidance for the full year came in a little below expectations. Analysts currently at $1.91. They forecast profit of $1.81 to $1.88. So a little weak there. It also guided full-year sales a little bit below expectations. Estimate is for sales of $14.9 billion for the full year. It says revenue is probably going to be closer to $14.4 billion. On the earnings conference call, CEO Mark Thier said the company would manage if Cigna decided not to renew its contract with CTRX at the end of the year. And investors took that to mean, well, is it possible that Cigna may not renew? But that is partially blamed for the stock's weakness, but also a lukewarm outlook as well weighing on the stock. After the close today, definitely want to listen to what Salesforce.com has to say ahead of earnings. It's been rallying back with the market, but still underneath its 50-day moving average here, trading at 168.93, up 1.2% on the day. They're expected to earn 40 cents a share, but that would be a 7% decline from a year ago. Sales up 32% to $830.9 million. So we'll listen to what Salesforce has to say after the close today. In terms of stocks that we're watching here, got to respect Google here. Continues to perform well. Google is a very extended stock out here. Again, I've been hammering this point home in recent weeks that one of the reasons I was expecting a bit of a market pullback was just to let a lot of these extended stocks kind of pause and catch their breath, consolidate for a period of time, and present new entry points. Google needs to consolidate at some point. It may not do it, though. If indices break out, Google's probably going to keep heading higher. It's up $2.99 today to 802.77. Trading near its session low. If we pull up a weekly chart for Google, this is a stock that has a lot of characteristics I like to see. When I go about initiating coverage for a stock for ultimate growth stocks, Google has a lot of great qualities. I think the company is going to continue to grow nicely. I think the growth concerns around Apple are not nearly as much seen in Google, and that's why the stock chart looks like it does. But Google is working on 6 straight weekly price gains, definitely extended up here. I think it would be a gift if we'd be able to pick up Google on a pullback to its 10-week moving average, which is right around 759. So at 802, pulling back to 759 would be a great entry point, but you don't want to chase it up here. It has after 6 straight weekly price gains, probably going to see it consolidate at some point soon. United Rentals, URI, is a stock we've been watching for a little while. Great fundamentals at United Rentals, and what you have here is when the distribution in the market started last week, you had distribution in spades in United Rentals. You see a lot of higher volume declines. Last week, on this day here, Tuesday, you had a nice higher volume gain, and volume is getting quieter and quieter as the stock works its way higher. So it's not clear to me that this stock is going to be able to hold its 50-day moving average. Price and volume trends just don't add up, frankly. United Rentals is a provider of construction and industrial equipment rentals, basically in the U.S. and Canada. And again, outstanding fundamentals, good growth prospects, holding its 50-day moving average so far, but stock that was under distribution not that long ago, trying to make a case it's going to hold that 50-day, but not really keen on this low-volume rally attempt. Check in on the financials here today. XLF, this is the Financial Select Sector Spider Fund. Same situation here. Distribution in the financials last week, starting to actually kind of an eerily similar chart here to URI. Distribution through Monday, and then Tuesday, Wednesday, Thursday, volume getting lighter and lighter and lighter on the rebound. So, you hear a lot of talk about volume not mattering as much in the market as it has in the past, and I just don't agree with that at all. I think, basic laws of supply and demand govern this market, and volume is supply and demand. So there's never going to be a time where, higher volume declines followed up by lower volume, lack of conviction buying is going to be good for a stock. It just has never worked that way decade after decade. Stocks under accumulation in the 1920s and 30s and 40s look the same as stocks under accumulation now, and vice versa. So XLF making a case it's going to find support here at its 50-day moving average, but price and volume trends a little bit suspicious in this fund as well. One name we're definitely keeping an eye on, though, in the financial space is going to be SEI Investments. That is ticker symbol SEIC. Market cap of $4.9 billion. This is a company that provides asset management services, some technology services to institutional investors, investment advisors. Just love how the stock is holding its gains. And when you look at a weekly chart for SEI, if this market decides to get going again, and we do get breakouts for the major averages, a name like SEI Investments, just you can see the tight trading over the past 3 weeks or so, being very stubborn about giving back its gains. And SEI Investments, a good-looking chart in the financial sector right now. Tractor Supply, still looking good here. At last check, it was outperforming today. Similar situation here, just almost really just a perfect looking chart. A big move for Tractor Supply. This was I think it was late January, early February. Stock made a big move this week, and you can just see just how it has just moved sideways, held on to gains. Nice little base forming here, and Tractor Supply flirting with a breakout, working on 5 straight gains, but still flirting with a breakout here over 104.83. The one caveat here is that sales growth has been decelerating in recent quarters. When I'm looking at a company, looking at recent earnings and sales growth, it's much better to see accelerating earnings rather than decelerating earnings. Accelerating earnings implies strong demand for the company's product and service. Decelerating means that demand is softening. But still, when you look out, fiscal 2013, fiscal 2014, Tractor Supply should be able to grow annual earnings at a 15-20% annual rate. So fundamentals still okay here. Technically, still a very strong stock in the market. Shutterfly, name we've been talking about as well. Like Shutterfly's technical setup here, it actually staged a little mini breakout here from a short consolidation. The last swing point for Shutterfly was 42.67, but again, even though the stock is probably still within range here, you're dealing in a market where a new uptrend has not been confirmed. So I'm still erring on the side that we're still in a market under distribution here. So until we get a buy signal from the market, got to hold off, be patient, and avoid the pitfall of buying too early. But Shutterfly really acting well here, still within range after breaking out over 42.67 yesterday in pretty decent volume. Shutterfly, of course, is a photo sharing website. Basically, they can turn digital photos into photo books and greeting cards. I know one thing a lot of people in our family like to do, they go on trips. They take pictures, and then Shutterfly will put these pictures into a sort of a vacation book. Very easy, low cost, kind of a cool feature. So business looking pretty good at Shutterfly. Stock looks pretty good as well. All right, folks, headed into the final break. I'm going to get a glass of water, and I'll be right back. And Breakout Investing will be right back in about 4 minutes.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks. The Dow trying to extend its winning streak to 3 sessions, as are the S&P 500 and NASDAQ Composite as well. Got about 5 minutes left to go in Thursday's session. The Dow up close to 18 points. Now trading slightly in the bottom half of its trading range for the day. Last trading at 14,093. S&P 500 also given back some of its gains. It is now up just a little over 2 points to 1518. And the NASDAQ Composite, COMPQ, NASDAQ Composite, Right now up close to 5 points to 3167. You can see the NASDAQ Composite recently found support at its 50-day moving average. The Dow and S&P 500 didn't quite get down that far, but it's been a pretty impressive recovery for the market since the bloodbath on Monday that saw yet another higher volume decline, what we call a distribution day for all three major averages on Monday. It has been a low volume rally since then, and basic laws of supply and demand say that when you have heavy volume selling followed up by low volume buying, that is not a good sign from a technical perspective. So tough to have an edge in this market. You can make a case that stocks are going to head lower from here because of the recent distribution that's been in the market. But then again, we can go back and look at weekly charts for the Dow and S&P 500 and NASDAQ and see weekly charts that look a lot more bullish than bearish at this point. So it's hard to get too bearish on this market when you look at the weekly setups, not only for the Dow but the S&P 500 as well. Here's a look at the weekly chart for the S&P 500 on Tiger TV. Good supporting action so far at its 10-week moving average, and same thing for the NASDAQ Composite as well. When you look at weekly charts for the major averages, it's tough to make the bear case. But we're just going to have to wait and see how things play out. The earliest we could see follow through for the market or confirmation of a new uptrend would be tomorrow on Friday. That would be the fourth day of a rally attempt, and then what you'd want to see is just an unequivocal sign of strength. A percentage gain of 1.5%, 1.7%, 1.8%, 2% or more, where volume comes in higher than the prior session. One other growth name I wanted to check in on here that definitely I think has potential if this market does continue higher. Cerner down a penny today to 87.69. Want to look at a weekly chart for Cerner. This is another good technical setup in the market here. Cerner, we're looking at a swing point of 88.92, but after a big move a few weeks back, just kind of sitting here holding gains nicely above its 10-week moving average. This is one that could be ready to head higher as well. Mentioned after the close, Salesforce.com going to be coming out with earnings. Let's check in on Salesforce one more time. We'll see the stock is up 1.5% today, outperforming to 169.49. Still trading underneath its 50-day moving average. We're also going to hear from recent new issue SPLK, which shows great top-line growth in recent quarters. Splunk SPLK is a data analytics firm, and they are expected to report profit of 2 cents a share, with sales up 39% to $60.09 million. Splunk came public in April 2012. We're also going to hear from Deckers, The Gap, Air Lease, and that's it. Tomorrow morning, Best Buy and Dresser Rand. Pretty quiet in terms of earnings on Friday. Coming up next, the Tom O'Brien Show. Thanks very much for tuning in, folks. I'll see you back here tomorrow, 3 o'clock Eastern, for another edition of Breakout Investing. See ya.